we got to talk about the nuclear energy trade and uranium. Looks like we gonna get handed a gift from the stock market gods in the uranium sector. Hey, my name is Daniel Helmy, head of trading at Bull Markets Lifestyle. Welcome to Hot Trades of the Day, your daily show for swing trading ideas for the coming days and weeks. And let's jump right into it. Remember, uranium and nuclear energy are not the same thing. A lot of people think that, not a fact. Uranium is part of the nuclear energy trade. That trade also includes, for example, utilities, companies that build nuclear facilities. So there's much more to the nuclear energy trade than just uranium. But uranium offers the greatest upside, especially the uranium miners. Now, this is the Global X Uranium ETF. It's one of the popular ETFs that people look at for uranium, but the important thing to understand is this ETF does not represent the price of uranium. It includes a couple of companies and ETFs that track uranium prices by buying uranium, storing it, like Yellow Cake or the Sprott Physical Uranium ETF, but it's mostly the uranium companies, mostly the uranium producers. So, as you can see, if we look at this, after a beautiful double bottom and a W formation, the price now hit the uptrend that was broken in July from below and rejected it. That is a bearish signal. Now, the long-term trend, as you can see, absolutely intact, goes back all the way to 2020. Nothing to worry about here. So, what we're talking about is that we might get a short-term correction in the uranium companies. Again, Global X Uranium ETF, that's representing uranium companies. And this is why, if you look at the Sprott Physical Uranium ETF, which tracks the uranium price plus sentiment, so it's not one-on-one the uranium price, the spot price, which by the way right now is at 82 and it was at 7 for September and was at 78, I think, or 74 in August. So it's bottoming now and starting to go up. Makes sense with the fundamentals. So the Sprott Physical Uranium looks way better than the URA. What does this tell us? Well, this tells us that we are seeing a potential correction phase in the uranium stocks, and that's a beautiful buying opportunity. Right now, the hot trade in the nuclear energy sector is in the nuclear utilities. Look at this chart from Vistra. You think Bitcoin was good in 24? You think Nvidia was good in 24? Forget it. Vistra, that was and is the hot story of the year that almost nobody's in. I'm not in it, to be honest with you as well. But clearly I'm not getting in. Looking at an RSI of 83. I would rather look at this on the short side, but I would never, ever step in front of a freight train like this. Now, why are the utilities running? Well, the reason is because they have bigger market caps. That's where the institutional investors can invest. See, the institutional investors, they got the story. They know what's going on with nuclear energy. But a lot of the uranium producers and the explorers are too small for them to invest in, which gives us a great chance to get in on great prices. The uranium stocks are mostly driven by retail, and that's why they're not moving so far. Case of point, look at Cameco. Nice double bottom W formation, went up. Looks exactly like the Sprott. Why? Because this is where the institutions buy. Now, compare this chart to Energy Fuels, much smaller company. Doesn't look nearly as strong as Cameco. Why? Cameco is bigger. That's one of the very, very few uranium producers that institutional investors can invest in. That doesn't make it the best uranium company. It actually isn't. But it makes us understand what's going on in the market. Now, the chance is this. The smaller uranium producers and explorers are basically retail stocks. So when retail catches on, that is when these stocks go up and explode. Why would that happen? Well, look, it's the fundamentals for uranium are stronger than for any other commodity, even gold, with the exception of rare earth. I'll just give you two numbers because they always tell you don't give out too much numbers in the video, nobody can remember them. That's fine. So the Biden administration banned the import for enriched uranium from Kazakhstan and Russia, which is the right move because the US needs to build out their own nuclear energy, which we know they are doing. The US, 28% of the global demand for uranium comes from the US. And this was before the AI boom. So the AI boom with the deals that we've seen from Amazon, from Microsoft, will even increase the demand for nuclear energy. So let's say it goes up to 35% of the global demand. Sounds pretty reasonable because the US is the leader in AI. Okay, so that's the demand side. Now let's talk about the supply side. And this is the number that you need to remember. 0.15% of the global uranium production comes from the US right now. Not 1%, 0.15%. This discrepancy has to be solved. And the only way it can be solved is with a massive expansion of homemade uranium production in the US. Uranium made in the USA is the hottest story in the nuclear energy market in the coming decade. And that means that we want to focus on uranium companies like Energy Fuels that have mines in the US that are producing uranium in the US, or a few other companies are very close to start production. Now look at this nasty candle on Energy Fuels that we had yesterday. It's an engulfing candle, a very, very bearish signal, which means we can expect a correction probably to this area where we have the uptrend, which we broke over, so it makes sense that we get retested, and we have this horizontal support zone here, the purple zone, the perfect zone to get in on Energy Fuels. Your Energy, same thing, looks like it's going down to this support zone. Which goes, as you can see, all the way back. Right? So it's a very strong support zone and happens to correlate with the long-term uptrend, which is one of my favorite situations where I want to buy a stock and get in on the long side. So now there's one company where I would never short uranium stocks because the fundamentals are so bullish. But if there is one, this would be it. Uranium Energy, good company. I'm personally invested, full disclosure, I think since 2020 or 2021, long time. And this one doesn't look good, right? This one looks like it could seriously move down. If I would short a uranium stock, that would be the one. But I am not doing any short engagements in uranium. Instead, I am looking to use this correction to buy uranium stocks hand over fist, because the fundamental facts are clearly showing that American uranium companies that will produce or do produce uranium in the US, the fundamentals are only going to go up. There's going to be a premium on uranium made in the USA, which is going to go even higher than the normal uranium spot price. Now, the question is, when will the retail catch on? When will the fire catch on? Well, there are basically two factors. The first factor is already happening. That was the Microsoft news. So the retail investors don't understand the news that happened in Kazakhstan with Kazatomprom announcing that they're going to reduce production in 2025, 2026. They don't get that. Probably most of them didn't even hear this news. But the Microsoft news, everybody heard. So if another AI company, and I think all the AI companies will get on this nuclear trend to get nuclear energy, if this starts making the round and CNBC and the mainstream media starts talking about it, then it catches on. And the next big one is if the uranium spot price closes above 100, we're off to the races. This will happen. The fundamental factors clearly state this will happen. It's not a question if it'll happen, it's only a question when it will happen. So what does that mean? This weakness that's looking to develop in the uranium stocks, that's a gift for us to get in and to buy uranium stocks. Talk to you tomorrow. Bye-bye.